Good afternoon, everybody. Today is Friday. It's the 10th of January, 2014. We finished our first full week of the new year here in the market, and the S&P 500 was up. Most markets were, in fact. You can see that we are still down year to date in the S&P 500 and Nasdaq, but very close to being positive. The leader this year so far is gold. We'll see in a moment. I think it's still in a downtrend, and we'll talk about those trends here. So let's go ahead and take a look at the S&P 500 on the daily time frame to start out with, where we clearly have still a strong uptrend, higher highs and higher lows above all these rising moving averages. So nothing's changed there in the longer term. For the week, though, we had really 4 choppy days in here that basically saw a range of about 180, 280 up to about 184 and a dime. And it's good to see that we are closing, or that we closed right at the high end of that range after being rejected there 2 mornings in a row. That is Wednesday and Thursday morning we gapped up and were rejected from these levels. So what I'd like to see for next week ideally would be maybe a little bit of a pullback down towards about this level here, 183.70, and then to be able to break out and I think continue higher from there. We are still in a primary uptrend, and we have this as an important higher low. So 183-ish next week is going to be a very important level for support to hold for the intermediate term trend. And obviously we remain in a primary uptrend in all these markets. The Nasdaq is again was up slightly this week, up 0.75%. We're still down 0.75% in the Nasdaq, but we finished right at the highs last year as well, and we were a little bit extended coming into this year. We've seen a pullback down to the 20-day moving average, which is held. So we have right now, I think today's low at about 86.60. That's going to be an important level for this market to hold next week, and if we can do that, then I think that it should be a constructive week for equities in the Nasdaq 100 here. We've got a little bit of choppiness near term, similar to the S&P 500, so that says go slow initially. I wouldn't hurt to see a pullback down towards 87 and then to move higher, but I think at about 87.60 or the high for this week, that's going to be an important level to focus on next week. We also have this trend line in that area as well, so something to be aware of. But we do have an important higher low, so if 86.50 is broken, then perhaps we see a little bit further deeper pullback. That might even bring us down towards that rising 50-day moving average. There's no evidence suggesting that's going to happen. It's just that we want to be aware of all potential scenarios so we're not taken off guard, and we have a plan of action to avert disasters. Russell 2000 is holding up really well here, and it closed at its high for the year. Now this Russell 2000 is positive year to date, up 0.14% after gaining 0.75% this week, and it's only closed higher 2 or 3 times ever in the Russell 2000. It's good to see that similar to the S&P 500 level. So let's take a look in here. The S&P 500 got up to the top end of that resistance, whereas the Russell 2000 broke that recent resistance here. So perhaps the Russell is going to lead us a little bit. I think that next week our most important area of support will be this band right in here, basically 113.80 to 114.10. If we were to get down into that area, then I think we would want to express a lot more caution towards this market, and pulling back into here just kind of keeps it more neutral. So as long as we're above 114.20, then we're neutral, but we start getting a little bit more concerned if we break down below that range, and in particular if we break the lows of last week, then I think the 50-day moving average is something that looks imminent. But that is, if it breaks there, then the test of the 50 I think would be imminent. But there's nothing here to suggest that. It's just the opposite. We have a very strong market here with this higher low, with a rising 5-day moving average, and pretty much at all-time highs here. So the semiconductors have been a little bit messy recently. They have held this important level of support at about 41.60. So that 41.50 to 41.60 we saw this week was an important band of support. So that's what we're going to stay focused on next week. If we can maintain above this level here, then the semiconductors we give the benefit benefit of the doubt to. Looking at this 30-minute time frame, that is, each one of these candles represents 30 minutes, you can see that maybe it's forming a little head and shoulders pattern. I wouldn't be too concerned about that, though, because the bigger picture is still bullish, and this is basically our line in the sand for the intermediate term, 4150-ish. As long as we remain above that, then this longer-term uptrend should be considered innocent till proven guilty, and that the trend is more likely to continue than it is to reverse, as is any trend. That's trending stocks 101 is a trend once established is more likely to continue than it is to reverse. So the financials had a good week here. They were up 0.75%, or they were up, 0.75% year to date. So of the index of these indexes, the sectors, this one's really probably doing about the best. 2185 to 2190 will be a key level of support to hold next week. As long as we hold above there, it remains innocent until proven guilty, and you can expect higher prices in the financials. We are getting a little bit stretched here, so that's something to be aware of. But we're kind of grinding higher in here as well, so it's leaving what should be some decent support underneath us. If we get down below 2185, then you want to be a lot more cautious, but there's nothing suggesting that there's reason to move to the sidelines or take any profits off in there. Gold, as I mentioned, had a good week, and year to date it's up 3.5%. So my opinion of gold hasn't changed. It's in a primary downtrend. I would expect that this rally will start running out of steam somewhere in this area where we do have a declining 50-day moving average, and we're still in a longer-term downtrend. So I think that there's no hurry to be in gold. If you've got some gains this year, that's good. Just protect them. Shares of Apple, we're down $3.58 today, and as I had mentioned to subscribers, we're below this declining 5-day moving average in Apple, and there's no reason to be a buyer while we have prices below a declining 5-day moving average. We also failed to hold this 50-day moving average, where it appeared that there were buyers in there. And what I always say is we don't want to buy at the 50-day moving average. We want to look at that 50-day moving average and say, okay, the 50-day moving average often acts as support. Now let's drill down to a shorter term time frame. So that was at about $540 a share, that is. So let's drill down to a shorter term time frame to see if in fact the buyers were gaining control there. So there's that first close right near that 50-day moving average. We gapped down and just basically churning back and forth here with some resistance at about 547, and we broke down further the last 2 days. In fact, today we gapped up and then sold off to close down near the lows. Longer term, Apple's still in an uptrend, but this trend line is something that should be significant, and we've got this prior little band of resistance over here, so it appears as though it's in an area where support should be found. However, there's no evidence of that support yet, so it makes sense to look for the potential of support, but it's only potential support right now. We only know support after the fact. You can't say it's at support. It's at a trend line, but trend lines don't always hold. They often fail. So that's where we are with that one. Now, another stock that obviously gets a lot of attention is Twitter. And Twitter, if you look at it year to date, since it's come public, the volume weighted average price is right at about $56.35, and you can see we pulled down to that level and tested it here the last couple days. So the stock has had a pretty good pullback. In fact, there's a couple of interesting things about Twitter right now. If we take a look at the year-to-date the entire range since it's been publicly traded, we're right now right in the midpoint of that range. We're at a 50% retracement. That 50% retracement also finds us here at the volume weighted average price year to date. So those are interesting levels that say perhaps we're going to find some support in here. The other thing I would say is a measured move would take us from this high here. Let's just call it 75 to work with round numbers, and we'll call this 58. So basically we saw a decline of 17 points. If we take 17 off of this 70, that gives us a 53 price objective. And in fact, that was 71, so about 54. So we've come pretty close to the measured move objective. We're down at a 50% retracement, and we're at the volume weighted average price year to date in shares of Twitter. So here's an important level where it appears the stock should find some support. It doesn't mean it's going to form a massive bounce from here. There's no evidence right now that the stock is ready to bounce. I think that it's a good area to keep an eye on the stock, but not necessarily a good place to buy. Keep an eye on it for the potential that it can find that support in here and then replace this shorter term pattern of lower highs and lower lows with a pattern of higher highs and higher lows, and then perhaps we do get a more significant bounce, perhaps up to $61, $62 a share in Twitter. Let's take a look also. Some of the, this is good to see for me. I think it's one of the worst products there is the VXX. They do these 1-for-5 reverse splits, and they've done them, I don't know, 8-10 times. These are actual numbers adjusted for splits, but people still trade this thing. It trades 2.3 million shares a day, or is that 23 million? I can't tell. It looks like 23 million, but it's a flawed product, and it closed at an all-time low. No one who's in this VXX and still holding, who's bought it and is still holding, is making money, except for maybe 1 or 2 people here who bought a minute before the close. But it's a flawed product. Stay away from it. I like to point that out because it's just continually in a downtrend. It's just something to stay away from, and most people don't understand it properly either. Some of the stocks that we had real good winners. I'm sure you had some good winners too in Alpha Trends this week. We were involved in this EXEL at 621 and got stopped out of that one at 702. Clearly left some money on the table, but still a very nice trade, as was Ballard Power, which we got involved in over here at $1.66 and rode that one to $2.24 as it pulled back on this day. So 35% gain in there. One that didn't work out was this ONVO. I still think it's a good setup and will eventually turn higher. They're the 3D printing company for medical, but it's just we got involved in it at where did we get involved? $11.27. So we got involved right here, and we were stopped out at a 45-cent loss here today. Another one, though, that worked out for us was shares of WebMed. This was a real nice one, in fact. WBMD, this one we got involved in at $37.94. So we way back, I'm sorry, was it $37.94? $39.94. And we got out of this one at $43.30. In fact, that's where the old stop was. We need to raise that up, but Solar City was one that we got stopped out of. Got involved in it right here and stopped out today right in this 66.30 area. So really a lot of good winners in the market, and that's what we focus on is, regardless of what the market's doing, where are the low risk, high probability trades, and that's what we focus on, looking at week in and week out and approaching the market with a disciplined methodology so that we're not just swayed by the news headline of the day, that we have an actual plan to implement each and every day. If you're interested, take a look. Sign up for the free 7-day trial at alphatrends.net. Thanks for tuning in.